But there was some positive news today out of the housing industry of all places. Home building surged to a 12-year high last month, thanks to an increase in both single and multifamily home construction. According to the Commerce Department, housing starts, which measures new home construction, rose by 12.3% to a seasonally adjusted annual rate of about 1.4 million units. Permits for future construction also climbed to levels we have not seen in about 12 years. The report suggests that lower mortgage rates and a strong jobs market have finally helped give the housing market a lift. But for how long? Back with us tonight to talk about that is Odeta Kushi. She's the Deputy Chief Economist at First American Financial. Welcome back.
Good to be here.
Now, one of the big problems for the housing market for the last few years has been low supply. Now we get this bump in construction in August. Is that a sign of hope, or what do you make of this?
Absolutely. This is great news for the housing market. Not only this month's bump, but the upward revision of last month's. That's two good prints on housing starts, which are a great leading indicator of future supply, which the housing market is in desperate need of.
And we have lower interest rates. They've ticked up a little bit in the last few weeks, but overall, we were approaching near record lows.
Record low mortgage rates, and the labor market continues to be strong, and this is really boosting not only consumer confidence but builder confidence, which we're finally seeing reflected in the housing starts data.
But we've had low mortgage rates for a while. We've had a strong jobs market for a while. Why now? Why all of a sudden do you think home builders are suddenly starting to break new ground here?
A little bit of seasonality, and it takes some time to show up in the data and in the confidence. But I think seeing multiple months of lower mortgage rates and a sustained healthy labor market is giving them the confidence they need. Ultimately, builders want to know that when they build, that home will sell. And I think consecutive months of a strong economy is giving them that reassurance.
Yet at the same time, we just ran a bite of a bond investor, a big bond investor, who says the odds of recession are rising. How does that trickle down through housing?
So right now, we're not necessarily seeing an immediate recession concern. There's certainly some global economic slowdown, but what matters for us really is that, and for housing particularly, is that the consumer feels confident and is strong. And by strong, I mean that wages continue to rise and consumers continue to spend. And we see both wages rising and consumer spending. We just saw positive retail data come out last month. And so ultimately, when the consumer is strong, the housing market is strong as well.
One other problem we've seen with the housing market has been the affordability issue. Prices have just been higher than some of the first-time buyers especially could afford. Where does that stand right now? Are you keeping tabs on that?
Absolutely. Nominal house prices obviously are still rising, but consumers are really gaining the benefit of lower mortgage rates and higher income. Ultimately, it's all about the purchasing power, what you can afford to buy, and that's not just a function of house prices, but also how much you can afford to borrow, and that's really where the low mortgage rates are coming in.
So very quickly, what do you see as the biggest challenge?
I still see supply as the biggest challenge in the housing market, despite the fact that inventory has been increasing and obviously we're building more homes. We're still near quarter-century lows in terms of inventory, and so I would like to see some more months of positive gains in housing construction.
Odeta Kushi with First American Financial. Again, thanks for joining us tonight.
Thank you.